Good morning, students. Today we will discuss IndAS 40 investment property. So in the last two classes, we have discussed IndAS 16 property, plant and equipment. And if you remember, so I have touched upon the concept of investment property while discussing the definition of property, plant and equipment. So this is the second asset related standard in your CA final financial reporting curriculum, which is IndAS 40 investment property. Although under accounting standard, there is no any separate standard which talks about accounting and accounting recognition disclosure of investment property, but there is a standard AS 13, accounting standard 13, which is on accounting for investment. And this standard includes the concept of investment property as far as accounting standards are concerned. But under IndAS and IFRS, there is a separate standard, detailed standard, IndAS 40 and IAS 40, which talks about investment property. So friends, today, as far as IndAS 40 agenda is concerned, we will be discussing what is the objective of this standard. I mean to say why this standard has been issued. So we are going to discuss the objective of the standard. Okay. Then we will discuss what is the scope of the standard. So on which area this standard is applicable. For example, if a company has acquired a machinery and machinery has been given on rent, so whether this standard is applicable, this standard is not applicable because this standard is applicable on land and building which is given on rent or on capital appreciation. Okay, so we'll discuss this part later on. Then we will be discussing the most important part, what is meant by investment property. I mean to say meaning of investment property, definition of investment property, okay, and owner occupied property, OOP, owner occupied property, okay, investment property and owner occupied property. So again, there is a new term which is given under IndAS 40, owner occupied property. We will be discussing this later on. So this owner occupied property is nothing, it's a property, plant and equipment as per IndAS 16. Okay. Then we will be discussing some important aspect of investment property. So I'll write here only. So first investment property definition, then your owner occupied property definition, then some important aspect. Like if there is a mixed use, I mean to say there is a property and that property is used as an investment property and property, plant and equipment, then how to do the accounting under IndAS 40. Okay, so we'll discuss this part also. Then we will be discussing the recognition part, when an item will be recognized as an investment property. So we will be discussing recognition part also. And while discussing recognition part, we will be discussing your measurement part, measurement at initial recognition and measurement after recognition. I mean to say subsequent recognition, measurement after recognition. Okay. So you are familiar with these terms because I have already discussed these terms in IndAS 16. Okay. So measurement at transaction date, measurement at reporting date. Okay. Then we will be discussing transfers to and from investment property. For example, there is a building which has been classified as a property, plant and equipment. Why? Because the company was using that building for the business purposes. Now the company has decided to lease out that building, or the company has decided to let out that building. So since the use has been changed, so according to IndAS 40, that property has to be treated as an investment property. So transfer from PPE to investment property, transfer from inventory to investment property, okay, or transfer from investment property to PPE, transfer from investment property to inventory. So we will be discussing this part also. Then the last part is disposal. When investment property is going to be derecognized or disposed of. So this is the overall picture of IndAS 40 investment property. This is a very small standard. That is why Institute has allocated one class for this particular standard. So we are discussing this standard in today's class, and we will be completely finish off this standard in the today's class only. So this is the overall picture of IndAS 40. So I hope my audio and video is clear to you guys. There is no any problem so far. Are you guys comfortable? So friends, again I am repeating, as far as the syllabus, as far as the scope of IndAS 40 is concerned, we will be discussing objective, why this standard has been issued, where this standard is applicable, what is meaning of investment property, what is the meaning of owner occupied property. Then we'll discuss some important aspect of investment property in case there is a mixed use, how to do that, in case when a subsidiary is leasing out or subsidiary is providing its building on rent to the holding company, then what will be the treatment in consolidated financial statement and standalone financial statement. We will be discussing when an item like land and building will be recognized as a PPE. Then we will be discussing measurement at initial recognition, measurement after recognition, what will happen in case of transfers from investment property to other standard to investment property. Then we will be discussing derecognition, which is disposal. Okay. So 3-4 students have confirmed that everything is clear. Okay. So Kaustav, if time will permit, definitely I'll take that illustration from Institute study material on IndAS 16. But first of all, we should finish this IndAS 40. So friends, I am removing this part. Hope you have written down this particular portion. Now let's discuss what is meant by investment property. First of all, what is meant by investment property? Before jumping into the detail of investment property, I want to give you a comfort as far as definition of investment property is concerned. Just remember, there are two items if held for two purposes. One is land and building, land or building. Okay. So when I'm talking about IndAS 40, I'm only talking about land and building. I'm not talking about any other asset except land or building. Okay. Land and building, land or building, land, building, part of the building. So I'm only talking about land or building. Okay. So these two assets are only covered under IndAS 40. Any asset other than land and building will not be covered under IndAS 40. Okay. If this land and building is held for, if this two asset is held for two purposes, what are the two purposes? Two purposes means if this land and building is held for rental purposes, for earning rental, held for rental purposes, if it is held for earning rental, or for capital appreciation purposes, capital appreciation. Okay. So what is meant by capital appreciation? You have heard that, for example, the company is having 3 buildings. Okay. So the company is using 2 buildings in its business operation, and the company has lease out, or the company has rent out 1 building to earning rentals. Okay. So that particular building is considered as an investment property. The second one, for example, in Greater Noida. So you all have heard about Noida. So in Greater Noida, the government has announced that the airport will come near Greater Noida. Okay. So in that case, you want to invest in that particular vicinity so that when the airport will come, the prices of the land will go up. Okay. So it means the company is investing into a land or building just for the objective of earning a long-term capital gain. Okay. Just for the objective of earning long-term capital gain. So the objective of the company is not to earn rental. The objective of the company is not to use that particular land or building for its business purposes, but the only objective is to earn long-term capital gain. So in that case, it will also be considered as an investment property. So my dear students, two asset If hold for two purposes, then it is considered as a investment property. I'm not saying both. I'm saying either rental or for capital appreciation, land or building, land and building. So this entire standard would move around only these two asset and two purposes. Okay. Is it clear so far? Is it clear so far? Any doubt? Guys, any doubt so far? Okay, so let me share my screen now. Is it visible to you guys? Whether the screen is visible? So we discussed about the agenda. We are going to discuss these items. Now, what is the objective of this standard? Why this standard has been issued? Why this standard has been issued? The objective of this standard is to prescribe the accounting treatment for investment property and related disclosure requirements. Okay. So this standard only talks about the accounting treatment of investment property. I mean to say, when an item of investment property is required to be recognized, at what value it is going to be recognized, what will happen at the reporting date. Okay. So what will happen if the investment property is required to be derecognized, okay, or disposed of. So this standard talks about the entire accounting treatment and the related disclosure requirement relating to investment property. Okay. Then what is the scope of this standard? What is the scope of this standard? So this standard is applicable in the recognition, measurement, and disclosure of investment property. So this standard is only applicable for investment property. Okay. If there is an investment property, this standard is applicable. And what is an investment property? So this standard is only applicable for land and building, land or building. And this standard is not applicable to biological asset related to agricultural activity. Do you remember when we were discussing the scope of IndAS 16 property, plant and equipment, we have discussed that IndAS 16 was not applicable to biological asset related to agricultural activity, which is covered under IndAS 41 agricultural standard. So which are the biological asset? Biological asset means land or building. Okay. And if there are any asset which is used in the agriculture, okay, for example, tractor. If tractor is used in the agriculture, then that tractor will be a property, plant and equipment under IndAS 16. Land. If a land is used in the agricultural activity, again that land will be qualified as a IndAS 16 property, plant and equipment. So this standard is not applicable to biological asset, and this standard is not applicable to mineral rights and mineral reserves, which is covered under different standards like IndAS 106. Okay. Now we will be discussing most important part, investment property. So before moving on to this definition, let me look at the query. If you have any query, we will be discussing that. So just a minute, the query box is uploading as of now. So just give me 2 seconds. Okay, yes. So Ambika is asking, sir, land or building given on lease is not covered here, isn't it? Ambika, land or building given on the lease is covered under IndAS 116. Okay, but we need to see if it is given on the rent, then it will be covered under investment property. So the right of use asset has been shown under investment property. So we will be discussing this part. Okay, but yes, as far as accounting is concerned, if the land or building is given on lease basis, then it will be covered under IndAS 116. Accounting is covered under IndAS 116. But what will be the presentation requirement? That asset is required to be shown as a investment property, under head investment property. Okay. So let's discuss the definition of investment property. what is the definition of investment property? So just we have covered that property, okay, land or building, land or building, LB, land or building, okay, which is held, land or building held. Held by whom? Held by whom? Held by the owner. Held by the owner. Owner means the company has purchased the building and the intention is to earn rental from that building, or the company has purchased the building, the intention is to earn capital gain on that building, okay. So it is known as the owner, held by the owner because the company has purchased, or by lessee, or by a lessee, or by a lessee, or by a lessee as a right of use asset, as a right of use asset, as a right of use asset. How many of you are aware about IndAS 116? How many of you are aware about IndAS 116 leases standard? So land and building held by owner or lessee as a right of use asset to earn rental or for capital appreciation. The objective is to earn rental or capital appreciation or capital gain okay. Okay, so land and building held by either owner, I mean to say it is purchased by the company, or by a lessee. That company has taken the asset land and building on a lease basis, okay. So that company is a tenant, that company is a lessee as a right of use asset to earn rental or for capital gain purposes, okay. So how many of you are aware about IndAS 116 leases standard, which is a new standard which has been come into picture on 30th March 2019. So this IndAS 116 leases was notified on 30th March 2019, and this standard says that if you have not covered this standard, it will be covered as a part of your course only. So this standard says that if a lessee has acquired any asset, okay, on a lease basis, so the concept of operating lease and finance lease has been the concept of operating lease and finance lease is no more from the lessee perspective under IndAS 116. So earlier under Indian accounting standard, we have a concept of operating lease and finance lease from the lessee perspective also, but under IndAS 116 this concept was removed, this concept was deleted. Now there is a single model which says that if a lessee has acquired any asset on lease, then that lessee has to show that asset as a right of use asset, okay. For example, A Limited has acquired a building. So Ambika is saying don't know IndAS 116, but AS 19 is known. Yes, Ambika, AS 19 is a standard which is under accounting standard, old accounting standard. But under IndAS, earlier it was IndAS 17, but now IndAS 116 is applicable. So IndAS 116 talks about leases, okay. So it is counterpart of AS 19. So friends, when you read IndAS 116, you will learn that the concept of operating lease and finance lease has been removed, has been deleted from the lessee perspective. From the lessor perspective, this concept is there, operating lease concept, finance lease concept, and this concept is the same concept which we have learned under accounting standard 19, okay. So just I am giving you some thought about IndAS 116. Otherwise you will have a complete 3 or 4 lectures on IndAS 116, okay. So if a lessee has acquired a land or building or any other asset on a rental basis or on a lease basis, okay. For example, A Limited has acquired a land or a building or any other asset from B Limited, okay, for a period of 2 years or for a period of 3 years at an annual rental of rupees 1 lakh. In that case, this lessee A Limited is required to capitalize that particular lease asset as a right of use asset, okay, because the standard says that the lessee is getting a right to use that asset. The lessee is getting a right to use that asset, and that is why this has to be capitalized as a right of use asset. Okay, what is the value on which the right of use asset is going to be capitalized? For example, it is getting on 3 years lease rental, 3 years lease rental, and the rental is 1 lakh rupees per year. So standard says that what we were doing like under a finance lease, same accounting we are required to do here. So 1 lakh rupees in the first year, second year, and third year. So this right of use asset is required to be capitalized on the basis of present value of future lease rental. On the basis of present value of future lease rental. For example, the discount rate is 10%. In that case, this first year 1 lakh has to be multiplied by 10% discount rate. What is the present value factor? 0.909, 0.91. For second year 0.83. For third year 0.76. Okay. So whatever will be the present value, on that present value, for example, the present value is 2 lakh. I'm just taking an assumption. For example, the present value is 2 lakh. So in this case, right of use asset is going to be capitalized at 2 lakh. What will be the accounting entry? Right of use asset account debit to leasehold obligation account. So there is one asset and one liability. Okay. This right of use asset is going to be depreciated over a period of 3 years. This leasehold obligation is going to be accrued. Okay. For example, the first accounting entry is right of use asset debit to leasehold obligation at a price of 2 lakh. Okay. So this 2 lakh will be depreciated over a period of 3 years, and this 2 lakh will become 3 lakh. How? So interest is going to be charged on this particular 2 lakh because the company has to pay 3 installment, 1 lakh 3 installment. So 2 lakh interest has to be charged on 2 lakh so that it will become 3 lakh, and the company has to pay 3 lakh. So the leasehold obligation will be 0 over a period of 3 years. So this is the IndAS 116 concept. I am just giving you a concept. Okay. Otherwise, you will have a complete session on IndAS 116. Okay. Is it okay? So Ambika is saying present value is 2,46,000. You are right, Ambika. Just for the sake of simplicity, I have written 2 lakh here. So friends, the concept of charging rental in P&L account is no more under IndAS 116. IndAS 116 says that the lessee has to record right of use asset at the inception of the lease contract. Okay. And the lessee has to depreciate this right of use asset over the lease term. The lessee has to accrue interest expense over the leasehold obligation so that the total leasehold obligation will become equal to the total lease rentals. Okay. So this was the concept under IndAS 116. Now I am moving on to the definition of investment property, land and building. So we discussed land and building held by owner who has purchased this or lessee. If a company has taken a building on a rental basis, okay, so the company has taken a building on a rent basis and the company is subleasing, that building. Okay, so if the company is subleasing that building, so when it is subleasing, it means it is earning rental. Okay, so in that case, it will be considered as an investment property. It will be considered under investment property. Okay. Purushottam, I would request you, so we are talking about investment property. I would request if there is any query related to IndAS 16 property, plant and equipment, please take up that query at the end of the session after 9:30. Okay. Otherwise, we will not be able to complete this particular standard. So please focus on IndAS 40 investment property as of now. So in what is investment property? Land and building, if it is held by owner or lessee as a right of use asset for the purpose of earning rental or capital appreciation, then it is considered as an investment property. Now I'm asking one question. For example, A Limited has taken a building on a rental basis. So A Limited has taken a building on a rental basis, and of course under IndAS 116, that lessee has to record right of use asset, okay, in its books of accounts. But A Limited is using that building for its business purposes. Whether that right of use asset will be shown as an investment property or property, plant and equipment. Whether that right of use asset has to be shown as a investment property or property, plant and equipment. Have you got my question? My question is, A Limited has taken a building on a rental basis. Okay, so A Limited has taken a building on lease basis. The objective of A Limited is to use that particular building for business purposes. So whether it will be shown as an investment property under IndAS 40 or it will be shown as a property, plant and equipment under IndAS 16. What is your answer? Great. Nanda is saying, sir, it is PPE, property, plant and equipment, because the objective is not to earn rental or capital gain. The objective is to use for the business purposes. Okay. The objective is to use for the business purposes, and hence it will be shown under head property, plant and equipment. And how the accounting will done? How this right of use asset will be accounted? I have told you, this right of use asset has to be calculated and accounted as per IndAS 116 leases standard. Okay, but where it is required to be presented, it is required to be presented under IndAS 40 if the objective is to earn rental or capital appreciation. Okay, but if the objective is to do the business, if the objective is to use for the business purposes, administrative purposes, then it is not a investment property, then it is IndAS 16 property, plant and equipment. So now again I'm summarizing, if a land and building is held for rental purposes or for capital appreciation purposes, rather than for sale in the ordinary course of business, rather than for using for the business purposes, then it will be considered as a investment property. I hope it is clear to everyone. Vaibhavi is saying, sir, it is PPA's purpose is to use for business purposes. Ambika is saying it will be shown as an investment property. So Ambika, this will not be shown as an investment property. Okay, if the objective is to use that particular building or land for business purposes, then it is not a investment property, because the primary objective of investment property is either to earn rental or for capital appreciation. Okay, understood? Great. So friends, I hope this PPT is visible to you. So investment property is a property, land and building, which is held by the owner or by the lessee as a right of use asset. The objective is to earn rental or for capital appreciation or both, rather than for use in the production or supply, rather than for sale in the ordinary course of business. If it is held for sale in the ordinary course of business, what does it mean? What does it mean? It means it will be shown as an inventory. If it is held for use in the production or supply of goods and services, what does it mean? It means it will be shown as a property, plant and equipment. So Ambika, if it is taken on lease, okay, for example, the company has taken an asset on the lease. So how the accounting will be done? The accounting will be done as per IndAS 116, okay? And I have told you the lessee has to record a right of use asset in the balance sheet, okay? Now that right of use asset has to be shown under property, plant and equipment, or it is required to be shown under investment property. It will depend upon the purpose of that particular right of use asset, okay? If the purpose of the lessee is to sublease that asset, in that case, it will become an investment property. If the purpose of the lessee is to use that asset for its business purposes or administrative purposes, then it will be shown under property, plant and equipment. Okay. Ambika, I hope it is clear to you. Purushottam is asking, what is the purpose of capital appreciation? Purushottam, I'll take a layman example. Generally, if you have a surplus fund, then you have purchased or your parents have purchased an additional flat or additional land or additional building, okay, just to earn the long-term capital gain. At times we are investing our money. So we are saying that we have purchased one flat for our own consumption, for our own resident, and we have purchased an additional flat for the investment purposes. So what is this investment purposes? So this is known as a capital appreciation. Okay. So Purushottam, Ambika, I hope this answers your query. Shall I move ahead? Yes, Ambika, you're right. So I have taken an asset for lease and I'm using that asset for sublease. Okay. Is it clear? Okay, let's move on. So I've just pasted two pictures for this investment property. Now, what are the examples of investment property? What could be the example of investment property? Land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business. Okay. So the company is acquiring land just for selling in the short-term course. Okay. For example, the company has purchased 10 plot of land. The objective is to sell those lands. Okay. In that case, it will not be considered as an investment property. It will be considered as a inventory. Okay. For example, a real estate developer is acquiring land for selling purposes. It will be inventory for him. But if someone is purchasing a land for long-term capital appreciation, let's say for 3 years, 4 years, 5 years, it is more than 1 year. It is not for the sale in the ordinary course of business. Okay. It is for the capital appreciation purposes. Then it will be considered as an investment property. Okay. So this is one of the examples. These examples are very important. These examples are very, very important. Okay. So land held for long-term capital appreciation. Land held for long-term capital appreciation. Second, land held for currently undetermined future use. The company has purchased the land. The company was getting the land at a very reasonable price. And the company has purchased that land. But the company is not sure. The management is not sure whether we need to use this land for our business purposes, or we need to keep this land for the long-term capital gain purposes. The company is not sure. So this is known as a land held for a currently undetermined future use. If an entity has not determined that it will use the land as a property, plant and equipment, or for short-term sale in the ordinary course of business, the land is regarded as held for capital appreciation purposes. Okay. So if a land is held for undetermined future use, again, it will be considered as an investment property. So the first thing is land held for long-term capital appreciation purposes. Long-term capital appreciation, not for sale in the ordinary course. What is the second example? The second example is held for undetermined. The management is not determined. Undetermined future use. They are not sure about the future use. So until and unless they are not sure about the future use, it will be considered as an investment property. Sir, what will happen, for example, after 2 years, the management has decided to use that particular land or building for its business purposes. At that point of time, it will be shifted from investment property to property, plant and equipment. Okay. Purushottam, I would request for the larger audience, I would request please park your question for some time. Otherwise, you will not be able to understand this IndAS 40 investment property. So as today I am talking about investment property standard. So I request you to please focus on this particular standard. Definitely I'll take your query, but I'll take your query at the end of the session. Okay. I would request to park your IndAS 16 queries till that time. Third, a building owned by the entity and leased out under one or more operating leases. Okay, under one or more operating leases. So it means the company has purchased a building. The company has purchased a building, and the objective is to lease out that building. Objective is to provide that building on rental basis. The company has 5 floors, and the company has leased out all the 5 floors to different individual or different companies. Okay, so that land or building, that building is held by the company for the operating lease purposes. Okay, so friends, from the lesser perspective, under IndAS 116, the concept of operating lease and finance lease is there, but from the lessee perspective, the concept of operating lease and finance lease is not there. So there is a big change in lease standard from earlier standard to new standard. Okay, so you will read this concept later on while discussing or while reading this IndAS 116. For the time being, just write down that under IndAS 116 leases, the concept of operating lease and finance lease is there from the lessor perspective, from the landlord perspective. But from the tenant perspective, from the lessee perspective, the concept of operating lease and finance lease is not there. Okay, just write down this concept. You will have a detailed discussion on this concept while discussing IndAS 116 leases. Okay, so friends, the company has purchased a land, or the company has purchased a building, and the company is leasing out that building under one or more operating leases. Okay, so the company is a lessor. If a company has purchased a building, the company is a lessor. So why the word operating lease has been used here? If the company is purchased a land, if the company has purchased a building, and the company has given that building on a finance lease basis, in that case, under finance lease, the asset has to be derecognized in the books of the lessor. And if the asset has been derecognized, then the question does not arise whether it is a PP or it is an investment property, because the asset is no more in the books of the lessor. That is why the word operating lease has been used here. Okay. So Purushottam is again, so Purushottam, that is why I have told you, please focus on this particular standard. I have covered your query 4 or 5 times since morning as far as this question is concerned. So Purushottam is asking, sir, if the company purchased the building for rental purposes as well as for capital appreciation purposes, what is the kind of property? The property is considered as an investment property. If a company has purchased a land, if a company has purchased a building, and the objective is either to earn rental, either to held for long-term capital appreciation, or to held for both, for rental purposes as well as for capital appreciation purposes. So the company is saying that we will provide this building on a rental basis, and when in the long run we will get a good hike or good amount, we will sell that building. Okay, so this is known as an investment property. So third one is building held for giving on operating lease, OL, on operating lease. And one more part is written here, and it is also written here that or held by the entity under a lease as a right of use asset. I have told you under IndAS 116, if a company is having a asset, land or building on a lease basis, and it is for the purpose of subleasing. Okay, so lessee. Okay, for a lessee, what will be capitalized? Right of use asset will be capitalized. And if the lessee is taken this building or land on a lease basis, and the objective is to sublease, so this will be covered as a under head investment property. Okay. So Pujita is saying ownership gets transferred to lessee under finance lease that is no longer recognized in the lessor books. Yes, Pujita, you are right. So that is why the word used here is operating lease. You are right. What is the fourth point? What is the fourth example? Just a minute. A building that is vacant but is held to lease out under one or more operating leases. Sir, what will happen? A company has purchased a building, okay, and the building is lying vacant. There is no tenant. The objective is to earn rental, but the building is lying idle. Then what will happen? Answer is it will still be regarded as an investment property. Okay, if it is vacant, but the intention is to earn rental, but the intention is to provide under one or more operating leases, it is still considered as an investment property. Okay, lying vacant, but objective is rental. Earning rental. Okay. Sir, what will happen if a company is constructing a building? Property which is being constructed or developed for future use as an investment property. The company is constructing a building with an intention to use that building for the rental purposes. with the intention of keeping that building for the long-term appreciation purposes. The intention is not to use for the business purposes. Then what will happen? So that will be considered as an investment property. Okay. So property constructed for rental or capital appreciation So this will be considered as an investment property. Okay. Understood? So we discussed these part. So these are the examples. What are these? These are the examples of investment property. These are the examples of investment property. Examples of IP. What are the examples? It is held for long-term capital appreciation rather than for sale in the ordinary course. If something is available for sale in the ordinary course of business, it will be treated as an inventory. Undetermined future use, the management is not determined what will be the use of that particular land or building. Okay. Building held for giving on operating leases. Lessee has recognized right of use asset. The objective is to sublease that land and building. So this right of use asset has to be shown under the head investment property. The building is lying vacant, but the intent is to earn rental in future. Again, it will be considered as an investment property. The company is constructing or developing a building or a land, and the objective is to earn rental in future, or the objective is to earn long-term capital gain. So again, it will be shown under the head investment property. Okay. Yes. Any query so far? Any query so far related to investment property? Ambika is asking, sir, if I acquired land on lease basis, it should be operating lease or finance lease to give on sub operating lease. Ambika, again, I am repeating the concept. From the lessee perspective, if you are acquiring a land on a lease basis, you are a lessee. Okay. From the lessee perspective, the concept of operating lease and finance lease have been finished off, have been removed, have been deleted. There is no concept of operating lease or finance lease from the lessee perspective. From the lessor perspective, the concept of operating lease and finance lease is there. Okay. Now, what is the concept of operating lease and finance lease? You have learned that if the risk and reward are getting transferred, then it is considered as a finance lease. But if a risk and reward is not getting transferred, it will be considered as a operating lease. And you have also learned there are 4 or 5 factors to determine is it a finance lease, like your fair value of the asset is equal to present value of the lease rentals. The asset is equivalent to the major part of the economic life of the contract. The asset is of specialized nature. The lessee has a option to purchase at the end of the period. So these are the 4 or 5 indicators which is there under AS 19 and IndAS 116. Okay. So from a lessee perspective, if you are a lessee and you have taken a land or building on a lease basis, and your objective is to sublease that property, in that case, that right of use asset has to be shown as an investment property. Okay. Ambika, I hope I answered your query. But what about lessor? So if lessor is giving an asset on a finance lease basis, then as per Pujita, that asset is no more required to be recognized in the books of the lessor. It has to be de-recognized in the books of the lessor, and hence question will not arise, is it an investment property or PPE? The question will not arise because that asset has been de-recognized from the books of the lessor. Is it clear, Ambika? Okay. So friends, moving on to the next part. These are the example of investment property. So these all examples are given under given in your study material also. What is not an investment property? What are not an investment property? Let me share my presentation once again. I hope it is visible to you guys. Okay, what is not an investment property? Property held for sale in the ordinary course of business. I have told you, if a property is held for sale in the ordinary course of business, it will be treated as an inventory. Okay? And it will be covered under IndAS 2 inventories. Second part, owner occupied property. So what is owner occupied property? It is a property, plant and equipment. What is owner occupied property? Owner occupied property is nothing. Owner occupied property, OOP, it is nothing. It is a property, plant and equipment under IndAS 16. What was the definition of property, plant and equipment? Property, plant and equipment are tangible item. Tangible item which are held for use in production or supply of goods and services, held for rental purposes, held for administrative purposes. Held for rental purposes, which one? Other than land and building. I have told you under IndAS 16 property, plant and equipment that where the held for rental purposes is written, it is written for the asset other than land or building. If a land and building is held for rental purposes, it will be covered under IndAS 14, not IndAS 16. Okay, clear? Okay, so if it is a land and building held for sale in the ordinary course of business, like for real estate developer, it will be considered as a inventory under IndAS 2. If it is a owner occupied property, I mean to say the company has purchased a factory building and it is held for production. So it will be a IndAS 16 owner occupied property or property, plant and equipment. If the company has taken an asset on a lease basis and the objective is to do a business, the objective is to use that building for production or for administrative purposes like running a head office, corporate office. So that will be considered under IndAS 16. Okay. What is the second part? Property that is leased to another entity under a finance lease. Do I need to explain this part once again? Property that is leased to another entity under a finance lease. So under finance lease, if a company is leasing that particular property under a finance lease, so that property is derecognized in the books of the lessor. Okay, and if it is derecognized in the books of lessor, then no question arises, is it an investment property or is it a PPE? Okay, because that property, that asset is no more in the books of the lessor if the lessor is giving that particular asset on a finance lease basis. Okay, so we have already aware about this fact under our accounting standards as well. Understood? So this is the definition of owner occupied property. Owner occupied property is a property held by the owner or by the lessee under a right of use asset for use. Please remember, the word is for use in the production or supply of goods or services or for administrative purposes, The word rental has been removed here. The word rental is not there. Why? Because the owner occupied property, under owner occupied property, if the word rental has been used here, it will contradict the definition of investment property. If a land and building is held for rental purposes, it is not a owner occupied property, it is a investment property. Okay, so Pujita is saying, sir, own use, I mean to say for business purposes, sale in the ordinary course of business, construction contract held for sale, leases under finance lease. Yes, Pujita, you are right. So these all are excluded from the investment property. Okay, so this owner occupied property is nothing, it's a property. It's a property under IndAS 16. It's a property, plant and equipment. Okay, yes. So now I'm moving on to the important concept part. Let me know if you have any doubt so far. Let me know if you have any doubt. Guys, before moving into this part, I would request just to raise your query if you have any doubt so far in understanding what is investment property, what is owner occupied property, what are the examples of investment property. So if you find any challenge, so just let me know. I'm just giving you 1 minute. Okay. So 6 students have confirmed. There is no any doubt so far. Okay. So let's move on to the next concepts. So you remember I have told you important concept. We'll also discuss some important concept on investment property. Now the question arises, if the investment property is used for dual purposes, if it is held for used for dual purposes. So dual purposes. For example, there is a building. There is a building owned by the company. Okay. And this building has a 5 floors. This building has 5 floors. Okay. So this is the building 1, 2, 1, 2, 3, 4, 5. This building has 5 floors. These first 2 floors or these 2 floors have been given on rent, and these 3 floors is used as a corporate office. Is used as a corporate office of the company. It means it is used for the administrative purposes. Okay. So the company has a building. The company has purchased a building, and the company is holding 2 floors on rental basis and 3 floors for using it as a corporate office. Okay. Now the question arises whether this entire building has to be shown as a property, plant and equipment, or it is required to be shown as an investment property. Okay. So is it covered under IndAS 16 or is it covered under IndAS 40? What is your view on this? Guys, what is your view on this? So standard says that this particular building, if a land and building is held for dual purposes, then you need to see whether the company is able to split the value of that particular asset or not. Okay. What does it mean? It means that you need to check whatever portion is on the rental basis, whatever portion is held for rental basis, it will be shown as a investment property, and whatever portion has been used for business purposes, it has to be shown as a property, plant and equipment, provided the company is able to split the value of this particular building, the portion of which is held for rental basis, the portion of which is held for using as a corporate office basis. Okay. So if the company is able to split, when the company is able to split, for example, as per the law of the land or as per the law of the country, the company is able to sell independent floors. Okay. The company is able to sell independent floors, or the company is able to lease out independent floors to the different parties. In that case, it can be demonstrated as that the company is able to split the values. Okay. But for example, as per law, the company cannot sell the independent floor. If the company has to sell a floor, it has to sell entire building. The company cannot sell the independent floors. In that case, it cannot be constituted as that the company is able to split the values. Okay. What does it mean? First of all, you need to understand, if the company is using a particular asset, अगर company land और building use कर रही है dual purposes के लिए, dual purposes means company उसको business के लिए भी use कर रही है और rent के लिए भी use कर रही है. So what is the underlying principle? The underlying principle is जितना portion rent के लिए use कर रहे हैं, that has to be shown as a investment property. जितना portion business के लिए use कर रहे हैं, that has to be shown as a property, plant and equipment, provided. अब अगर मुझे उसको इन्वेस्टमेंट प्रॉपर्टी या पीपी दिखाना है, वी नीड टू हैव अ वैल्यूज. फॉर एग्जांपल, इस पूरी बिल्डिंग की वैल्यू 1 करोड़ है. इफ इट इज 1 करोड़, so we need to have a value of these 3 floors and these 2 floors separately. Okay. But if the company is not able to split the values, because the law says that you cannot sell the independent floors, or you cannot give the independent floor on the finance lease basis. In that case, the company will not be able to split. These floors between IndAS 40 and IndAS 16. Then question arises, what will happen? So in that case, if it is for dual purposes, then you need to see company is able to split the value. Company is able to split the value. Then what will happen in that case? So the rental portion under investment property and business use portion under PPE. If the company is not able to split, then what will happen? In that case, the company has to show it as a PPE if investment property portion is not significant. This is the first option. What is the second option? Show it as an investment property if PPE portion is not significant. Now, sir, in our current example, you have taken an example of a building where there are 5 floors, okay? And you have said that if the independent floor cannot be sold out separately, if the independent floor cannot be leased out separately on a finance lease, in that case, you are saying that the company is not able to split the values, okay? So in the current case, how do we account for that building? Is it under PPE or is it under investment property? So friends, in this case, you need to see that the 60% portion is used for the business purposes, and hence it is shown as a PPE, okay? The highest portion is used as a business purposes, and hence it is shown as a PPE, okay? If the highest portion, for example, 3 floors have been given on rental basis, in that case, it will be shown as a investment property. Is it clear? Guys, is it clear? Now I am taking you on the institute study material where we have 3 examples of this. Are you able to see the study material? Are you able to see the study material? Please see the study material. If it is dual purpose, able to split, it is considered as the owner occupied portion has been considered under IndAS 16. The rental portion should be considered under IndAS 40. Okay. If it is for the dual purpose and unable to split between the owner occupied and rental, then it will be considered as under IndAS 40 if the property, plant and equipment portion is not significant, and PPE if investment property is not significant. Okay, so that is there in the standard. Okay, understood? Okay, so now we'll see these 3 examples also. Sun Limited owns a building having 15 floors, of which it uses 5 floors for its office. So there is a 15-floor building. It uses 5 floors for its office. The remaining 10 floors are leased out to tenant under operating leases. According to law, the company could sell legal title to the 10 floors while retaining legal title to the other 5 floors. So the company can sell, the company can lease out the independent floors. Okay. In the given scenario, the remaining 10 floors should be classified as an investment property. since they are able to split the title between the floors. Okay. Any doubt in this example? Ambika, Pujita, Purushottam, Rohan, Kaustav, any doubt? So Purushottam, there is no any quantification given in the standard. The standard only says that if you are not able to split, you need to see what is the major portion, what is the use of the significant portion. So that is why I have given an example. In my example, the major portion of the building is for the business purposes. The 60% is for business purposes, 40% is for investment property. So the management is required to disclose this fact in the notes to accounts, that the value of the building is not splittable, because the building cannot be sold in the parts. It cannot be sold as an independent floors, and that is why the value could not be splitted, and hence it is shown as a property, plant and equipment. Okay. But as far as threshold is concerned, as far as quantification is concerned, it is not given in the standard. The standard only talks about significant and insignificant part. Any other question? So Kaustav is saying, Kaustav has a very good point, sir. What will happen if, for example, 50% portion is for business use and 50% portion is for the rental purposes? In that case, Kaustav, the management needs to apply a judgment. The management needs to apply a judgment is whether it has to be shown as an investment property or as a property, plant and equipment. The management can use both the option with the proper disclosure in the notes to accounts. Okay. It can use both the option. Okay. Any other query? Yes. So we have clear with the first example of Sun Limited. The second example is for the Moon Limited. The second example is for Moon Limited. Moon Limited uses 35% of the office floor space of the building as its head office. So 35% is using as a business purposes. It leases the remaining 65% to the tenants, but it is unable to sell the tenant space or to enter into a finance lease related solely to it. Okay. So Moon Limited is using 35% of the area as its head office. 65% area Moon Limited has given on rental basis, but Moon Limited cannot sell the tenant space. I mean to say, Moon Limited cannot sell that 65% portion independently. If it has to sell, it has to sell the entire 100% portion. Okay. Or Moon Limited cannot lease out that 65% space on the finance lease basis. Okay. It can only lease out that space on an operating lease basis. Okay. Therefore, the company should not classify the property as an investment property, as the significant portion is. So therefore, the company should not classify the property as an investment property, as the 35% of floor space used by the company is significant. Okay. So here there is a doubt. If you will see, 65% portion is used as a rental basis, and 35% portion is used as business purposes. So to my mind, this has to be shown as a property, plant and equipment with a suitable disclosure in the notes to accounts. Okay. So it has to be shown as a investment property, to my mind. I think this part needs a correction in the study material. Example number three. Okay. So before moving on to the example number 3, let me discuss a different concept and another concept from this dual purposes. Yes. Now the concept of ancillary services. Ancillary services. What is meant by ancillary services? So the management is providing a space on a rental basis. The objective is to lease out the building on a rental basis. and the management is also providing some services. Okay, for example, the management is providing a security guard services. So the management has leased out its building or its floor to a different company, to another company, and the management is also providing house cleaning services, or let's say security guard services. So if management is providing a ancillary services in addition to giving the area on a rental basis, then what will happen? So standard says that if the portion of the services is not significant, if the portion of the services is not significant, okay, if the portion of ancillary services is insignificant, then the entire property has to be shown, then that property has been shown as an investment property. Okay, but if the portion of the ancillary services is significant, if the portion of the ancillary services is significant, in that case it has to be shown as a property, plant and equipment. Can you give me an example of this? Can you give me an example of this where the ancillary services are significant? Can you provide an example where the ancillary services are significant? Hotel services. What is the purpose of the hotel? When you go to the hotel, you are using a room, and while using a room, you are paying the price for the room. Okay, you are paying the price for the room. Okay, so whenever you talk about the hotel, are you talk about that the rental is cheaper, the rental is higher, the rental is lower? You are talking about the services of the hotel. That particular hotel is providing a very good services. Okay, you are always talking about the services. For a hotel industry, although a hotel is providing a room on a rental basis, but their services, their ancillary services are significant. Their ancillary services are significant in relation to providing the room on the rental basis. Okay, they are providing the cleaning services, they are providing the food services, they are providing the swimming pool services, they are providing the spa services. Okay, so they are providing so many services which is ancillary, which is considered as ancillary services, and which are significant services. So in this case, if you will see the balance sheet of hotels, if you will see the balance sheet of Taj Hotel, if you will see the balance sheet of Lee Meridian, if you will see the balance sheet of Intra-group hotels, so these all hotels are not shown as an investment property. These hotels are shown as a property, plant and equipment. Okay, why? Because the portion of the ancillary services are significant. They are selling the product, they are selling the hotel room as a complete package of it. Okay, so in case of hotel industry, the hotel building has been shown as a property, plant and equipment, not as an investment property. Okay, but if the ancillary services are insignificant, generally the owner provide a security guard also. So that is considered as an investment property only. Okay, so now let's look at this example of the institute study material. An entity owns a hotel which includes a health and the fitness center housed in a separate building that is a part of the premises of the entire hotel. Okay, so an entity owns a hotel which includes a health and fitness center housed in a separate building which is a part of the premises of the entire hotel. Okay, the owner operates the hotel and other facilities on the hotel with the exception of the health and fitness center, which can be sold or leased out under a finance lease. The health and fitness center will be leased to an independent operator. The entity has no further involvement in the health and fitness center. In this scenario, management should classify the hotel and other facilities as property, plant and equipment, and the health and fitness center as investment property. If the health and fitness center could not be sold or leased out separately on a finance lease, then because the owner occupied portion is not insignificant, the whole property would be treated as a owner occupied property. What does it mean? What does it mean? So let me clarify one more thing here. So have we understood this concept with the example of a hotel? If the ancillary services are significant, then it is shown as a property, plant and equipment. If the ancillary services are insignificant, it will be considered as an investment property. Okay. Now one more concept. So A Limited has a hotel. A Limited has a hotel. Okay. So A Limited given this hotel to a third party. A Limited has given this hotel to a third party to run the hotel. A Limited has given this hotel to the third party to run the hotel under a management contract. Under a management contract. Okay. So A Limited has purchased a hotel. For example, A Limited has purchased or constructed a hotel, let's say a Taj hotel, and it has given to Shami Hotels. Shami Hospitality is a company. So they have given this Taj hotel to Shami Hospitality to run this hotel, okay, under a management contract. And this A Limited is charging an amount of rupees 2 lakh per month from Shami Hospitality. Now the question arises. Whether in the books of A Limited, this hotel will be shown as a owner occupied property, I mean to say PPE, or investment property. What is your answer? So I have told you, where the ancillary services are significant, in that case, that particular property has to be shown as a property, plant and equipment, owner occupied property. But the ancillary services are not significant, then it has to be shown as an investment property. Generally, the landlord, the owner, is providing, apart from the rent, apart from the area, apart from the space, they are also providing some services. Okay. So if the portion of the services are significant, in that case, it will be shown as a property, plant and equipment. If the portion of the services are insignificant, it will be considered as an investment property. होटल के केस में क्या होता है? होटल के केस में जो portion of the services है वो significant होता है. So that is significant. Okay, they are providing the cleaning services, they are providing the laundry services, they are providing the food services, spa services, swimming pool services, gymnasium services. So in the case of hotel, the ancillary services part is significant in relation to using the area or space. Okay. So मैंने बताया आपको, if it is significant, it will be classified as a owner occupied property. So Purushottam, if you will see the balance sheet of the hotel companies, for example Taj Hotel, for example Intra-group Hotels, so you will find all the hotel buildings has to be shown under property, plant and equipment. It is not an investment property. Now I have taken another concept. I have taken one more concept, for example Taj Hotel. So A Limited has purchased a Taj Hotel, and A Limited does not have the experience to run the hotel. So A Limited has given this hotel under a management contract to Semi Hospitality, who has the experience to run the hotel. And A Limited is charging 2 lakh rupees per month from the Semi Hospitality. A Limited has not been entered into day-to-day affairs of that hotel. So A Limited is only charging 2 lakh rupees per month. In that case, this hotel, this Taj Hotel, has to be shown as a PPE or investment property in the books of A Limited. Standard says that it has to be shown as an investment property in the books of A Limited, because A Limited is not interfering, is not involved in the day-to-day running of the hotels. A Limited is only concerned with a fixed amount, which is considered as a rent amount. So in this case, if A Limited has given a hotel to a third party under a management contract, so that hotel will be shown as an investment property in the books of A Limited. But if A Limited is running the hotel at its own, in that case, it will be shown as a property, plant and equipment. Okay. So that example is given in the study material also. Understood? Guys, have you understood? So for the sake of clarity, so let me share my PPT. So if you will see, I am again repeating this entire important concept. Dual use property is able to split. Investment property is held to on rental or for capital appreciation or both. Some property comprise a portion that is held to on rental or for capital appreciation, and another portion that is held for use in the production or supply of goods or services or for administrative purposes. If these portions could be sold separately or leased out separately under a finance lease, an entity account for the portion separately. Okay, so we have discussed this. Just we can see the example once again. OBC Limited owns a building which consists of 10 floors. It uses 7 floors as its own office, and remaining 3 are leased out to tenant under the operating lease. Under the company's country law, company can liberally transfer the title of individual floors independent of other floors in the building. So in this situation, 7 floors should be classified as PP under IndAS 16, and 3 floors should be classified as investment property under IndAS 40, since company is able to split the title between the floors. Okay. If the portion could not be sold separately, the property is investment property only if an insignificant portion is held for use in the production or supply of goods or services or for administrative purposes. So we have seen that. In some cases, an entity provides ancillary services to the occupant of a property it holds. An entity treats such a property as an investment property if the services are insignificant. For example, when the owner of the building provides security and maintenance services to the lessee who occupy the building. In other cases, the service provided are significant. For example, if an entity owns and manages a hotel, services provided to guests are significant to the arrangement as a whole. Therefore, an owner-managed hotel is considered as a owner-occupied property or a property, plant and equipment rather than an investment property. Okay. So any query so far? Any doubt? Any query? So Kaustav is saying, sir, in your example, A Limited, it is an investment property, right? Kaustav. Pujita is saying, sir, in case of semi-hospitality, is it an investment property? Pooja, in case of a semi-hospitality, in the books of the semi-hospitality, it will be shown as a property, plant and equipment. In the books of A Limited, it will be shown as a property. It will be shown as an investment property. Ambika is saying, sir, please repeat the concept of Taj Hotel concept. Ambika, I am saying. So we all are clear so far that if the ancillary services are significant, for example, in case of hotel companies, so they are showing the hotel as a property, plant and equipment. Okay, owner occupied property. Again, I have taken an example. For example, A Limited is a company which does not have experience to run the hotels. So A Limited has acquired a Taj Hotel. Okay, and A Limited has given this Taj Hotel to semi-hospitality under a management contract or under a contract to charge 2 lakh rupees per month. Okay, so in this case, A Limited is not involved in running this hotel. Okay, so whatever earned by semi-hospitality, be it 10 lakh, 5 lakh, zero money, negative losses. Okay, so that will be charged by, that will be bear by semi-hospitality. So semi-hospitality is running the hotel. Okay, A Limited is charging 2 lakh rupees, fixed amount of 2 lakh rupees per month from the semi-hospitality. So in this case, in the books of A Limited, it is not shown. This Taj Hotel property will not be shown under property, plant and equipment. It will be shown under investment property. Okay. But in the books of semi-hospitality, for example, this has been taken on a lease basis by the semi-hospitality. So in the books of the semi-hospitality, he will show it as a right of use asset, and that right of use asset will be classified under IndAS 16, property, plant and equipment. Okay. So Purushottam is asking how to quantify. So Purushottam, you need to see, if a hotel will provide only a room, hotel will not provide the food services, hotel will not provide the spa services, laundry services, cleaning services, whether the hotel will be able to run. So you need to see what is the intent, what is the objective, what is the business model of the company. Okay, so you need to see that. So according to that, you will be able to conclude whether the ancillary services are significant or not. In case of hotel, the services are always important. The services are significant. Just take a layman language example. जब भी आप होटल में जाते हो आप क्या कहते हो? इस होटल की सर्विस अच्छी है, इस होटल की सर्विस अच्छी है. आप ये नहीं कहते इस होटल का रेंट अच्छा है, आप कहते हो इस होटल की सर्विस अच्छी है, which includes everything. Okay, so for managing a hotel, for operating a hotel, for running a hotel, services are very important, and hence it will be considered as a significant part of the entire package. Okay. So Ambika is saying, sir, in case of management contract, ownership is with Taj Hotel. Yes, Ambika, you're right. That is why we are saying Taj Hotel A Limited is the owner of Taj Hotel. Okay. So that is why whether that Taj Hotel building, whether that Taj Hotel will be shown as a PP or investment property, it has to be shown as an investment property. Okay. Is it clear? Ambika, is it clear? Okay, friends. So let's move on to the next part. Okay, now one more concept is given in the standard, and the standard says that for example, A Limited. A Limited is a parent and B Limited is a subsidiary of A Limited. B Limited is a subsidiary. A is a parent, B is a subsidiary. So A Limited owns a building. A Limited owns a building. Okay. A Limited owns a building, and A Limited has given this building. A Limited has given this building to B Limited on a rent basis. A Limited has leased out this building to B Limited. Okay. A Limited has leased out this building to B Limited on a rental basis. Okay. Purushottam, you can see the balance sheet of Intra-group hotels. Okay, IBS hotels. So you can see the balance sheet of any hotel industry or any hotel company. Okay. So they are showing the entire hotel building as a property, plant and equipment. Why? Because the services are significant. Although they are providing this room on a rental basis, but since the services are significant, so that is why they are not calling those building as an investment property. They are calling those building as a owner occupied property, as a property, plant and equipment under IndAS 40. Okay. So you can see the balance sheet of any hotel company. So friend, A Limited has purchased a building and A Limited has leased out that building to B Limited on a rental basis. Okay. Now my question is, what is the treatment of that building in the books of A Limited? Is it a PP or is it an investment property? What is the treatment of this building in the books of A Limited? Is it a PP or is it an investment property? So tell me, in the standalone account of A Limited and B Limited, how is it shown? Tell me, A Limited, B Limited, okay, standalone, console. So how is it shown under these accounts? So B Limited is a subsidiary, so console is not applicable to B Limited. But for A Limited, standalone and console, both accounts needs to be prepared. So what is the treatment? What is the treatment of this building in the books of A Limited, in the standalone books of A Limited? It is an investment property. So A Limited is leasing that building to B Limited A Limited is earning rental. So it is an investment property in the books of A Limited. So it is an investment property in the standalone books. In the books of B Limited, what is the treatment? So B Limited is using this building for head office. B Limited is using this building for head office purposes. So B Limited will show it as a PPE, property, plant and equipment. B Limited will show this right of use asset as a PPE, property, plant and equipment. Okay. And now what will be the treatment in the console books? What will be the treatment in the console books? What will be the treatment in the consolidated books? So Kaustav, you are right. In the books of A Limited, it is an investment property. Ambika is also saying the same thing. Gomati, Chavi is saying that in the standalone it is investment property. In the consolidated it is PPE. Pujita is saying A Limited it will be investment property. B Limited it is PPE. But what at the group level? What at the group level? At the group level, standard says that at the group level, since this A Limited has purchased a building which is used by the subsidiary as its head office. Okay, so A Limited has purchased a building which is used by the subsidiary as a head office. So as far as the entire group is concerned, this property is used in the business of the group. This property is used in the business of the group, and hence in the consolidated financial statement, it will be shown as a property, plant and equipment. It will be shown as a owner occupied property. So this is a concept which is given under IndAS 40. It says that in the standalone level, you need to see the company who is earning rental, it has to show as an investment property. The company who is using the property for business purposes, it has to shown as a PPE. Okay, but in the consolidated accounts of the entire group, it will be shown as a owner occupied property or property, plant and equipment. Understood? Is it okay? Perfect guys. Yes, so you all have given a right answer. Okay, so let's move on to the next concept. Before that, I want to show you some examples which is given in the study material. Yes, so now we will summarize this entire part. So the first example, owned by a company and leased out under an operating lease. Tell me, is it an investment property? So just a minute. Yes, so now this has been hidden. Okay, so the first part, tell me quickly. If a company own a land and building and the company lease out this under an operating lease, is it an investment property? Yes, it is an investment property under IndAS 40. Okay. Second example, the company held as a right to use asset and lease out under an operating lease. Okay. So the company has taken a lease, the company has taken a building or land on a lease basis and sublease that land or building. So yes, that right of use asset has to be shown as a investment property. Okay. Third example, the company held the building as a right of use asset and lease out under a finance lease. So whenever the company is leasing out under a finance lease, it has to derecognize that right of use asset, and hence the question does not arise whether it is an investment property or PPE, because no asset is going to be recognized. Okay, and hence it is under the purview of IndAS 116. Property acquired with a view for development and resale. So the company has purchased a property and the objective is to renovate that property, develop that property and sell that property. So in that case, it will be considered as an inventory under IndAS 2, or it could be a asset held for sale under IndAS 105. Okay. Question number 5. Property partly owner occupied and partly leased out under operating lease. Okay. So property is partly owner occupied and partly leased out under operating lease. In that case, depends.
you need to see whether the company is able to split the values. If the company is able to split the value, then the owner occupied portion will be shown as under IndAS 16 and lease out portion should be shown under IndAS 40. If it is not able to split, you need to see what will be the significant portion. Okay. Land held for currently undetermined use. I have told you, if a company has purchased a land for which use has not been determined, in that case, it will be shown as a investment property. But when the use has been determined, for example, after 2 years, the company has decided to use that land or use that building for the purpose of business, in that case, it will be reclassified to property, plant and equipment. Property occupied by employees paying rent at less than market rate. Okay. So in many companies, you have seen that in case of ONGC, generally in case of public sector undertaking, so they are providing the flats or they are providing the houses to their employees at a concessional rent. So in that case, it is related to the business and hence it will be shown as a property, plant and equipment. It is not shown as a investment property because their objective is not to earn rental from the employees. Why they are providing the flats to the employee? Just to have a smooth business, just to have a, so that the people will come. For example, these PSU sites are located on the remote areas. Okay, so that is why they have developed a society for the purpose of their employees. Okay, so as per standard, it is shown as a IndAS 16 property, plant and equipment. So point number 8 is investment property held for sale. If investment property is held for sale, it will be covered under IndAS 105. Okay. Now the 9th one is existing investment property. So there is an existing investment property which is being redeveloped for continued use as an investment property. Okay. So there is an existing investment property and the property is getting renovated, redeveloped for continued use as an investment property. So in this case, it will be considered as a IndAS 40 investment property. Okay, it will continue to considered as a IndAS 40 investment property. So yes, Ambika, Chavi, Pujita, Kaustav, Rohan, Gomati. So you all are right. Aman, yes, guys, you all are right. Great. Okay. Now let's move on to the next concept. So it's 8:35 now. Let's have a break for 10 minutes. So we'll start at 8:45. I would request if you have any query or you have any problem in understanding the concept, just let me know. If you have any query so far. So far we understood the meaning of investment property, owner occupied property. What will happen if a property is taken on the lease basis and it has to be shown as a right of use asset. And if the objective is to sublease on an operating lease basis, it is investment property. If to sublease on a finance lease basis, it will be derecognized. If the objective is to use for the business purposes, it will be property, plant and equipment. Okay. So we have discussed all these concepts. Then we have discussed some important concept. If the property is used for the dual purposes, okay. So if the company is able to split, not able to split, if the company is providing significant ancillary services, like in case of hotel services, if a property is used as an investment property and property, plant and equipment in the standalone financial statement of a group, then what will happen in the consolidated financial statement? Okay. So we have discussed all these concepts so far because that was a very important concept. Otherwise, this is a very small standard. Okay. So we'll take over on the remaining part after this break. So we'll have a 10 minutes break and we'll start on 8:45. Purushottam has raised a query, sir. If rental building of the company provided to the employees of the company, what is the type of the property? So Purushottam, in that case, it will be classified as a property, plant and equipment under IndAS 16. Okay. So the measurement will be as per IndAS 116 leases standard as a lessee, and the asset has to be recorded as a right of use asset. But right of use asset under which category? Right of use asset under property, plant and equipment category. Okay. Now we are moving on to the next part. So recognition part. Recognition of an item as a property, plant and equipment. So if I am talking about an item, so in case of PPE, the ambit of the PPE was very large, very huge. But as far as investment property is concerned, we have started our session reflecting that this standard will include only two assets, land and building. Okay. So, and a land and building has to be recognized under IndAS 40 investment property if two conditions will be satisfied. One, future economic benefit will be probable. Future economic benefit will be probable, and cost can be measured reliably. Cost can be measured reliably. Okay, cost can be measured reliably. If these two conditions are satisfied, if you remember, same condition were there in IndAS 16 also. And even I have told you, for recognition of any asset, these two conditions are the underlying condition. These two conditions are the basic condition. There could be more condition. For example, in case of intangible asset, these two conditions are there, but there is one more condition. In case of agriculture standard, so in case of biological asset, these conditions are there. In addition to these conditions, one more condition is there. But these are the two basic conditions. Okay. So future economic benefit should be there and cost can be measured reliably. For example, the company has purchased a building and the intent of that building is to earn rental. But due to some government regulation, government says that you cannot lease out that building in the particular in that particular vicinity or in that particular area. So in this case, the company can only use that building for a business purposes. Okay. So this building should not be shown as an investment property. This building should be shown as a property, plant and equipment. So first of all, you need to satisfy two conditions: future economic benefit and cost can be measured reliably. And as we understood and as we learned in IndAS 16, that this future economic benefit and cost criteria, I mean to say this recognition criteria will be applicable to initial cost as well as subsequent cost. So Kaustav, Ambika, Pujita, do you remember this initial cost and subsequent cost concept which we have taken in the last two classes? So initial cost means the cost which you are incurring at the time of purchasing of this investment property. So that will be capitalized. And the subsequent cost, if the company is dismantling or the company is removing the roof of the building or interior wall of the building, and the company is adding or the company is replacing or the company is expensing of a major repair expenditure for that particular building. So if there is a subsequent cost and that subsequent cost is meeting these two conditions, future economic benefit and cost can be measured reliably. In that case, that subsequent cost is also required to be capitalized. Okay. Day-to-day servicing cost. So whitewash of the property, whitewash of building. Okay. Painting of the building. So these costs cannot be capitalized. But if the company is replacing an important part, of the building, in that case, replacement cost will going to be capitalized. Okay. Sir, what will happen with the existing part? What will happen with the cost of the existing part? So cost of the existing part is required to be decapitalized, derecognized if you have a carrying value of that particular part. Sir, if we don't have a carrying value of that particular part, then how to treat that existing part for the purpose of derecognition? Standard says that the replaced cost, the current cost, will be treated as an indicative value for removing the earlier cost, like we have done in the case of machine and turbine, like we have done in the case of truck and engine. Do you remember that? Ambika, do you remember that? So Pujita has confirmed. What about Kaustav, Ambika, Purushottam, Chavi, Gomati, Nanda? What about you guys? So same. What we have learned in IndAS 16, property, plant and equipment, same concept is there. The future economic benefits should be probable, cost can be measured reliably. This is applicable for both initial cost as well as subsequent cost. Day-to-day servicing cost is not going to be capitalized, but if there is a major replacement and repair cost, it is going to be capitalized. The existing part is going to be derecognized, okay, and current part is required to be recognized as a part of the cost of the investment property, okay. Yes, Ambika, day-to-day servicing cost is expensed off, like white wall expenses is going to be expensed off. Small repairs expenses like sanitary fitting expenses, okay. So some tap have been broken or damaged or not working, some wire needs to be changed, some electrical fittings needs to be changed, some sanitary item needs to be changed. So these small things should be expensed off. But for example, the roof need a complete replacement, one of the interior wall need a complete replacement, the escalators need a complete replacement. So these are going to be capitalized as a subsequent cost, and the existing part needs to be derecognized, okay. Yes, Ambika, you're right. Present value of the current replacement. So Ambika is saying, sir, if the carrying value or cost of the existing part is not known, then we need to bifurcate on the basis of current replacement cost. We need to arrive at a present value of the current replacement cost, okay. Great. So let me take this illustration number 1 of the institute study material. So let me share the institute study material illustration number 1. I hope this study material is visible to you. Yes. So X Limited owns a building which is used to earn rentals, okay. So it is an investment property because the objective is to earn rental. The building has a carrying value of rupees 50 lakh. Okay. X Limited recently replaced interior walls of the building and the cost of the new interior wall is 5 lakh. So cost of the building is 50 lakh, cost of the wall is 5 lakh, and the original walls have a carrying amount of rupees 1 lakh. Here the cost of the original wall is also given, which is 1 lakh. Okay. How X Limited should account for the above cost? So tell me, what will be the carrying value? What will be the carrying value? What will be the revised carrying value of this building? So first of all, 50 lakh is the total cost. 50 lakh is the cost. So current cost is going to be recognized, which is 50 plus 5, 55 lakh, and the carrying value of existing wall is going to be derecognized. So this 1 lakh should be deducted. So 50 plus 5 minus 1, 54 lakh is the revised cost. Okay. So this 5 lakh is going to be capitalized and 1 lakh is going to be derecognized. Under the recognition principle, an entity recognizes in the carrying amount of an investment property the cost of replacing part of an existing investment property at the time that cost is incurred if the recognition criteria are met, and the carrying amount of those parts that are replaced is derecognized. So X Limited should add the cost of new walls and remove the carrying amount of the old walls. So the new carrying amount of the building is 50 plus 5 minus 1, which is 54 lakh. Is it okay? Any doubt here? Any problem here? Any problem here? Okay. So perfect, guys. Now I am moving on to the measurement at recognition. Measurement at recognition. We understood the recognition. Now we are discussing measurement at recognition. So why this IndAS 40 has been taken after IndAS 16? Because many concepts are same as we have discussed in IndAS 16. Okay. So coming to measurement at recognition. Measurement at recognition. So standard says that the investment property has to be recognized at cost. It has to be recognized at cost. It has to be recognized at cost. Cost plus directly attributable cost plus transaction cost if any. Plus transaction cost if any. So this transaction cost is part of directly attributable cost only. What is meant by directly attributable cost? Directly attributable cost means cost which has not been incurred
had this investment property not been acquired or not been constructed. Okay, so if this has not been constructed or acquired, this cost would not have been incurred. For example, the company has purchased a building and the company has incurred a stamp duty to the extent of 5% of the cost of the building. So the cost of the building is 1 crore and the stamp duty is 5%, 5 lakh rupees. So this stamp duty has to be added as a transaction cost, as a directly attributable cost. The company has also given a lawyer fees or a court fees for getting the title registered in the name of the company. So again, it is a directly attributable cost. Okay. So any cost which is necessary for bringing the investment property in the location and condition necessary for getting it productive is considered as the cost of the asset. Okay. So if a company is constructing an investment property and if there is any refundable taxes, then those refundable taxes is required to be not required to be considered. But if it is a non-refundable taxes, for example, the company has purchased a land or building. So I'm just taking an example, and the company has paid a GST. The company has paid a goods and services tax, and the GST will be refundable. Means input credit can be received by the company. It can be claimed by the company. So this GST will not be part of the cost of the investment property. But for example, the company has paid a GST and the GST will not be refundable. The input credit cannot be taken for that GST. In that case, it will become a part of the cost of the property. Okay. Now, what should not be the part of the cost of the property? What should not be part of the cost of the property? So, for example, the company has purchased a building and the company has invited Mr. Amitabh Bachchan to inaugurate that building. Whether that particular cost of inviting Mr. Amitabh Bachchan will be capitalized. Tell me whether the promotional cost, whether the campaigning cost, promotional cost is going to be capitalized as a part of the cost of the investment property. Sir, this concept we have learned in IndAS 16, and there we have understood that this has to be charged to P&L. Same here, under IndAS 40, this has to be charged to P&L. Startup cost. Okay. So operating losses. The property has been acquired for the purpose of rental. Okay, earning rental. But the company does not get any tenant for a period of 2 years. Okay. So whatever amount which have been expensed off till the period of 2 years, whatever amount which have been incurred by the company for maintaining that property for a period of 2 years, so that will not be capitalized. Okay. So the objective is available for use. The objective is not put to use. Okay. So if a property is available for use, then future cost will not be capitalized until and unless it is meeting the recognition criteria. Okay. For subsequent cost. Understood? Abnormal cost. For example, the company was constructing a property. The company was constructing a building. And there were 100 bags of cement lying at the godown of the company. And those 100 bags of the cement was stolen by the thieves. Okay. So in that case, it will be considered as an abnormal cost, and abnormal cost should be charged to P&L. Same concept was there in the IndAS 16 PPE also. Understood? So let me take you through one of the example, illustration number 2 of Institute study material. Illustration number 2 of Institute study material. Ambika is asking, sir, what about interest on loan? If a company has purchased an investment property, or if a company has constructed an investment property and the company has taken a loan for that. So Ambika, that interest on loan is going to be capitalized as per IndAS 23 borrowing cost, if it is a qualifying asset. Okay. So same concept which was there in IndAS 16. X Limited purchased a building for rupees 30 lakh in 1st May 2001. Okay. On 1st May 2001, the purchase price of the building was 30 lakh. The purchase price was funded by a loan, and the company has taken a loan for this. Property transfer taxes and direct legal cost of rupees 1 lakh and 20,000 respectively were incurred in acquiring the building. Okay.
So these two costs have been incurred for acquiring the building. One is direct legal cost and one is property transfer taxes. In 2001-2, okay, so during the year, X Limited redeveloped the building into retail shops for rent under operating leases to independent third party. So now the company has acquired a building and the company is redeveloping the building for giving it on the rental basis. Expenditure on redevelopment work, 2 lakh rupees have been incurred by way of a planning permission. Okay, so the company was required to take a permission from some legal authorities, and that is why 2 lakh rupees have been incurred. The company has incurred 7 lakh rupees on construction cost, and the company has incurred, out of this 7 lakh, the company has incurred a taxes of rupees 40,000, which is a refundable purchase taxes. Means the company can claim an input credit for those taxes. The redevelopment was completed and the retail shops were ready for rental on 2nd September 2001. So now this investment property was available for use on 2nd September 2001. What is the cost of building at initial recognition? Tell me quickly, what is the cost of building? Please tell me fast. Tell me fast, what is the cost of the building? So Ambika, in this case, in this question, it is also given that it is funded by loan, but rate of interest is not given. So that is why we will not calculate the interest cost. But otherwise, it should be capitalized as a part of investment property. So guys, what will be your answer? Tell me quickly. What is your answer? What is your answer? What is your answer? So in this case, this is illustration number 2 of page number 7.332. Illustration number 2, page number 7.332 of Institute Study Material. So what is the cost of building? What is the purchase price? Purchase price is 30 lakh. Purchase price is 30 lakh. Okay. Purchase price is 30 lakh. And there is a property transfer taxes and direct legal cost. So transfer tax and direct legal cost. So transfer tax is 1 lakh rupees. 1 lakh. Legal cost is 20,000 rupees. Okay. In 1-2, the company has redeveloped this building. So there is a subsequent cost for getting it available for use. So there is a planning permission. So there is a planning permission for rupees 2 lakh. And there is a construction cost. There is a construction cost of rupees 7 lakh. But it includes 40,000 of refundable taxes. So refundable taxes has to be deducted because the company can claim the input credit. So what is the total here? 3 plus 1, 4, 4 to 6, 6, 7, 13 lakh. Sorry, 30 lakh. 30 plus 1, 31. 31 plus 2, 33. 33 plus 7, 40. 40 lakh 20,000 minus 40,000. So which is 39 lakh 80,000. 39 lakh 80,000. Okay. So this is the cost of the investment property. Is it okay? So cost includes purchase price plus non-refundable taxes plus directly attributable cost. Okay. What it is not include? Your abnormal cost will not be included. Your promotional cost will not be included. Okay. Your startup cost will not be included. Your operating losses will not be included. Okay. So these will not be included. Understood? Great. So friends, now I am moving on to the next concept of measurement at recognition. So we discussed measurement at recognition, that it has to be measured at cost. It has to be measured at cost. So Gomati, it is not 31,20,000. So Pujita, you are right. It is 39,80,000. So Gomati, you need to add the redevelopment cost also. The only exception is 40,000 here. So this 40,000 needs to be deducted because it is a refundable tax. So the second concept is, any doubt in this illustration? Any doubt? Gomati, are you clear on this? Do I need to explain again? So this was the first concept of purchase of investment property or construction of investment property. Now the second concept is deferred payment credit. Deferred payment credit. What is this concept of deferred payment credit? So in case of deferred payment credit, for example, the company has acquired a building or the company has acquired a land, and the company has acquired this land or building on a deferred payment credit basis. Deferred payment credit basis means, for example, if the company will purchase the building on a cash basis, the cost of the building is 1 crore. But since the company is saying that I haven't money as of now, so as of now I can pay you 50 lakh rupees and I want to pay another 50 lakh rupees after 2 years. Okay. So the seller is saying, in that case, the cost of the property is not 1 crore, the cost of the property is 1 crore 10 lakh. Okay. So it means he is charging additional 10 lakh rupees just because the buyer is deferring the payment. The buyer is delaying in the payment. So this 10 lakh rupees technically is nothing, it's a interest cost. Okay. So in case of deferred payment credit, the standard says that it is just copy paste of IndAS 16. The standard says that in case of deferred payment credit, investment property is recognized at cash price equivalent. Cash price equivalent. Okay. Cash price equivalent. So we have done the illustration number 1 of IndAS 16 for this deferred payment credit also. Okay. So for example, the company is purchasing a building on a deferred payment credit basis. The company is paying. So the company is paying an immediate payment of 50 lakh. And end of the year payment of 50 lakh. So I'm just taking an example. So in this case, what is the cash price equivalent? If the cash price equivalent is not known, how it will be calculated? So what is the present value factor? What is the present value factor of this immediate payment of 50 lakh? The present value factor is 1. So the immediate payment present value is 50 lakh only. What is the present value factor of this 50 lakh at 10%? So I'm assuming a discount rate of 10%. So what is the present value of a payment which is going to be paid after 1 year? What is the present value as of now? It is 1 divided by 1.1, which is 0.909. So what is 50 multiplied by 0.909? What is 50 multiplied by 909? $50 multiplied by 0.909 is equal to 45.45. 45.45. So it is 95.45 lakhs. Okay. So this is the present value, 95.45 lakhs. Okay. So this is the cash price equivalent. This is the cash price equivalent. So the difference between 1 crore and 95.45 lakh will go to P&L as an interest cost. But if it is a qualifying asset, this difference between 1 crore and 95.45 lakh will be capitalized as an investment property. Okay. Any doubt in this area? Any doubt in this concept? This is the same concept which we have discussed under IndAS 16. You're right, Pujita. You're right, Ambika. Absolutely all right. Thanks, Gomati. Okay. Now, next concept is exchange of asset. So we discussed investment property recognition, investment property measurement in case of purchase or construction. We discussed deferred payment credit. Now we are discussing exchange of asset. So if investment property is acquired investment property. This investment property is a non-monetary asset. Investment property is a non-monetary asset. So this investment property is acquired by way of exchanging, some monetary and non-monetary asset or some non-monetary asset. For example, the company A Limited has bought building. Okay. So this building is for rental or capital appreciation purposes. So it is PPE. So A Limited has bought building in exchange of machinery, in exchange of its one of the machinery and cash, So A Limited has bought a building and A Limited has given machinery and given some cash. Or it could be a scenario where A Limited has purchased a building and A Limited has given a machinery or given a vehicle. Okay. So the exchange could be between the non-monetary asset and non-monetary asset, or it could be by way of a combination of non-monetary and monetary asset. Okay. So this is known as an exchange of asset. Is it okay? This is known as an exchange of asset. Okay. This is known as the exchange of asset. Okay. So now, in case of exchange of asset, how to treat this exchange of asset? Standard says that in case of exchange of asset, you need to calculate the fair value. Now, in this example, so standard says that you need to calculate the fair value of asset acquired and fair value of asset given up. Okay. Fair value of asset acquired and fair value of asset given up. You need to calculate it. So if the company can calculate the fair value of asset acquired but cannot calculate the fair value of asset given up, then this transaction should be recorded at fair value of asset acquired. Okay. For example, the company cannot calculate the fair value of asset acquired but can calculate the fair value of asset given up. So in this case, this transaction will be recognized as per the fair value of asset given up. Okay. Second point, the company is able to. So in this example, it will be as per fair value of asset acquired. In this example, this transaction will be recorded as the fair value of asset given up. But the company is able to calculate the fair value of asset acquired as well as fair value of asset given up. The company is able to calculate both. Then what will happen? In that case, the standard says that the most appropriate way is to recognize the transaction on the basis of fair value of asset given up, because this is something you are giving. This is something you are giving to acquire some asset. Okay. So standard says that fair value of asset given up is the most appropriate value which needs to be accounted for the purpose of recognizing this fair value of asset acquired, this item which is acquired by the company. Okay. Is it okay? I request everyone to please note down this concept. The standard says that in case of exchange of asset, the transaction is recorded at fair value. Okay. Either fair value of asset acquired or fair value of asset given up. You need to see which fair value is more clearly evident. If fair value of asset acquired is there and fair value of asset given up cannot be calculated, then the transaction should be recorded at fair value of asset acquired. If the fair value of asset acquired cannot be calculated reliably, but fair value of asset given up can be calculated, the transaction has to be recorded at fair value of asset given up. If fair value of asset acquired is given and fair value of asset given up is also given, then fair value of asset given up has to be used for investment property. There is only one exception to this fair value. Standard says that in case of exchange of asset, the transaction has to be recognized at cost only if the transaction lacks the commercial substance. What is meant by it? Standard says that fair value accounting is not required if the transaction lacks the commercial substance. It means, for example, the company is exchanging one of the building for acquiring another building. Okay, so the company is giving an investment property as a building, and the company is acquiring an investment property as a building. So it says that commercial substance means the risk and timing of the cash flow should be different from one asset to another. For example, the company is giving a machinery and cash. The company is giving a machinery and acquiring a building. So the risk and timing of cash flow, the cash flow of machinery will be different from the cash flow of building. For example, machinery, the cash flow of the machinery will be arrived by selling the goods and services. The cash flow of the building can be arrived by way of giving it on a rental basis. So the model of the building and machinery are different. The model of generating the cash flow is different. So it is considered as this transaction satisfies the commercial substance. Okay. But if the company is exchanging a building for a building, so the model of generating the cash flow is same. So it says that this transaction lacks the commercial substance. And if a transaction lacks the commercial substance, then the transaction has to be recorded at cost. Is it clear? So this will have a more clarity when I'll take this particular illustration which is there in the institute study material. So don't worry about that. Yes, Sun Limited acquired a building in exchange of a warehouse whose fair value is 5 lakh. Okay. So friends, in this case, if you will see this, are you able to see this institute study material, page number 7.332? Purushottam, your query will be answered after this, example. So you will get your answer. So whatever you are asking, this is there. This is the part of this particular example. Okay. So Sun Limited is a company which acquired a building in exchange of a warehouse whose fair value is 5 lakh and payment of cash is rupees 2 lakh. Okay. So Sun Limited is acquiring an investment property, and in return for an investment property, Sun Limited is giving a property, plant and equipment, which is a warehouse, and the fair value of warehouse is 5 lakh and the cash payment is 2 lakh. The fair value of the building received by the company is rupees 8 lakh. So fair value of building is given, fair value of asset acquired is given, which is 8 lakh, and fair value of asset given up is also given, which is 5 lakh for building and 2 lakh rupees cash. Okay. The company decided to keep that building for rental purposes, and if it is for rental purposes, it is investment property. The building is acquired with the purpose to earn rental, hence it is a case of investment property acquired in exchange for a combination of monetary and non-monetary asset. Now tell me, what will be the accounting entry? So on what value this transaction is going to be recognized? Tell me. Friends, tell me, in this case, the fair value of asset acquired is given as well as the fair value of asset given up is given. So what needs to be taken? Which value needs to be taken? Kaustav, don't worry, your query will also be answered in the answer of this particular example. So what will be the accounting entry? What is the accounting entry? We will debit investment property. We will debit investment property. IP, investment property, building. Building account debit. Am I right? Because the company is purchasing the building, so building should be debited. 2, warehouse. The company is giving the warehouse, so warehouse needs to be credited to warehouse. 2, the company is also giving a cash to cash. Okay. Now, how much cash is given by the company? The company is giving a cash of rupees 2 lakh. So cash will be credited by 2 lakh. Now, what will be the value of warehouse? So the fair value of warehouse is given as a 5 lakh. The fair value of warehouse is given, but the carrying value of the warehouse is not given. The carrying value of the warehouse is not given. The carrying value of the warehouse is not given. So in this case, I'm assuming the carrying value is equal to fair value. The carrying value is equal to fair value. Okay. So 2 warehouse 5 lakh. Okay, and this building has to be debited. So at what value this building has to be debited? This building has to be debited on the basis of fair value of asset given up, fair value of asset given up, which is 7 lakh. Okay, so now I am flipping this question. Sir, for example, in this example, if the carrying value of the warehouse is given, for example, the carrying value of warehouse is equal to 3 lakh and fair value is 5 lakh. Then what will be your accounting entry? In this case, the warehouse should be credited by carrying value. The warehouse should be credited by carrying value, which is 3 lakh. So the warehouse will be credited by carrying value. This building should be debited by 7 lakh, which is fair value of asset given up, okay, which is 5 plus 2. Now where the difference will go, where the gain will go? To gain on exchange, which is 3 plus 2 plus 2, 7 lakh. Okay. So Kaustav and Purushottam, have you got your answer? Kaustav and Purushottam, have you got your answer? Pujita, I have told you, if the fair value of asset acquired and fair value of asset given up, both are given, in that case, you need to consider fair value of asset given up to record the asset acquired. Okay. Is it okay? So investment property has to be recorded at 7 lakh, not at 8 lakh. But sir, what will happen if the fair value of asset given up has not been given? In that case, you have to record your investment property at the fair value of the investment property, which is fair value of asset acquired. Okay. Any doubts so far? Otherwise, I have to move forward. Any doubt? Pujita, have you got it? So Gomati, you are right. Vaibhavi, you are right. Nanda, Chavi, you are right. Pujita, have you got this? Purushottam and Kaustav, have you got your answer? Okay. So now measurement after recognition. So friends, we have discussed deferred payment credit concept. We have discussed exchange of asset concept. Now we are discussing measurement after recognition. Measurement after recognition means at the reporting date. Okay. Measurement after recognition. Thanks, Pujita, for confirming. What about Kaustav and what about Purushottam? So Kaustav, this gain of, so Kaustav is asking, sir, where the gain on exchange, is it taken to OCI or P&L? So Kaustav, this gain on exchange will go to P&L, okay? Because the asset is getting derecognized. So technically speaking, we are selling our warehouse and we are purchasing our investment property. So this gain will go to P&L. Any other doubt? No. Okay, let's move on. So measurement after recognition. For measurement after recognition, you need to see, is it a owned property or is it a leased property? Okay. If it is a owned property, owned I mean to say purchased. Or if it is a leased property, means taken on lease. And for the purpose of sublease. Okay. So if it is owned or purchased, so it will be shown as an investment property. Okay. If it is for capital appreciation or rental, and if it is taken on lease and giving on a sublease basis, so it will be shown under head investment property as a right of use asset. Okay. So if it is a owned property, it has to be carried at cost model or fair value model or fair value model. Okay. So this fair value model concept was there in IFRS. This fair value concept was there in IFRS, but this concept is not in IndAS. Not in IndAS. Okay. So you remember we have discussed two models, cost model and revaluation model in IndAS 16 property, plant and equipment. Likewise, this two model, cost model and fair value model, is there in IFRS in IAS 40, but under IndAS 40 we have removed the option of fair value model. Okay, because India has started using the IndAS from 2015-16, from the year 2015. So there were a lot of companies which have an investment property, since last 20 years, 40 years, 50 years, where they have purchased a land or building for rupees 10 lakh, but now the value of the land and building is 100 crores, 200 crores, so that the company will not inflate its numbers. I mean to say, the company will not inflate its balance of investment property as well as reserves and surpluses. That is why we have removed the option of fair value model. Under IndAS. So under IndAS, the investment property has to be carried on the cost model only. Okay. Has to be. So Purushottam, I am explaining the cost model concept. So measurement after recognition, the investment property has to be carried at cost model only. So what is meant by cost model? Do you remember the cost model I have told you in IndAS 16? So cost model means, standard says that cost model is the same model, which we have discussed in IndAS 16. So what we have discussed in IndAS 16, standard says that under the cost model, carrying amount will be calculated. Carrying amount will be calculated as per cost minus accumulated depreciation minus accumulated impairment losses. So what does it mean? It means, sir, if there is a building, life of the building is 30 years, we need to charge depreciation every year. If there is a building, we need to do the impairment testing also. Okay, if the recoverable value is lower than the carrying value, we have to charge the impairment loss, and we have to charge the depreciation on this revised value on a prospective basis. Okay, so this is the meaning of carrying amount as per cost model. Is it okay? Is it clear? So the cost model is the same model which we have learned in IndAS 16. Sir, if we have taken the asset on lease, okay, and we have recognized right of use asset, as you told us that according to IndAS 116, according to IndAS 116, right of use asset will be capitalized or recognized. So what will happen on the reporting date? So this will be as per IndAS 116. The accounting treatment will be as per IndAS 116 leases standard. What it says? It says that right of use asset has to be depreciated at every year end over the period of the lease. And the leasehold obligation, the second leg, the interest is required to be charged on the leasehold obligation. So we are only talking about asset part here. So right of use asset is going to be depreciated. Okay, as per IndAS 116 leases. Understood? Any doubt so far? Any doubt? Guys, any problem? Any doubt? Please let me know if there is any doubt here. Yes. Any doubt? Okay. Okay, let's move on. So I'm moving on to my PowerPoint presentation. I hope it is visible to you guys. Subsequent measurement we discussed, subsequently measured at cost model only. and fair value model is allowed in IFRS, but it is not permitted in IndAS. So fair value model for investment property is not permitted. We have taken a carve out or removal of option in IndAS 40. But one thing is there. It says that although fair value model is not allowed, but the fair value is required to be disclosed. Fair value is required to be disclosed in the notes to accounts. For accounting purposes, fair value is not allowed, but for the disclosure purposes, fair value is required to be shown in the notes to accounts. Okay. So what is the cost model? First of all, it has to be measured at cost. Cost model will be same as we discussed in IndAS 16. So cost is equal to carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses. Okay. So we need to depreciate at every reporting period. Sir, do we need to depreciate the land also? So land is not subject to depreciation. Okay. So if there is a right of use asset related to land, that is required to be depreciated over a period of lease term. But the owned land, purchased land will not going to be depreciated. Okay. So impairment testing will be applicable for the case of land. Impairment testing at every reporting period. The fair value is required to be disclosed in the notes to accounts, but fair value is not applicable for accounting purposes as it is applicable in IFRS, because we have taken a carve out or we have taken a removal of option here. Okay. Thanks, Vaibhavi, for confirmation. Okay, friends, now we are discussing another concept of transfers. So we discussed the concept of measurement after recognition also. Now we are discussing the concept of transfers. What is meant by transfers? So friends, this transfer is also covered under measurement after recognition. Standard says that if the company has changed the use of the asset, okay, so the company has changed the use of the asset. So an entity shall transfer a property to or from the investment property when and only when there is a change in use. And a change in use occurs when the property meets or ceases to meet the definition of investment property and there is the evidence of the change in use. Okay. So what does it say? So now we are talking about transfers. Transfer could be two types. Transfer to investment property. Transfer from investment property. Transfer to investment property. Transfer from investment property. Okay. To investment property, from investment property. Now, standard says that the company will transfer the accounting and recognition requirement. The company will transfer the property to or from investment property if there is a evidence of change in use. If there is a change in use. Okay. And there should be a evidence of change in use. Sir, what is meant by this? For example, the company was using a building as its head office or a corporate office. Okay. So the company was using the building for business purposes. So the company was showing that building as a property, plant and equipment. So now the company was in high cash crunch. Okay. So the company was not able to run its business smoothly, and the company has decided to shift its head office into a smaller premises, which the company will take on a rental basis. And the company has decided to lease out. This particular building, which the company was using as its head office. So in this case, it is not only talking about the management intention. For example, the management is saying we are intending to lease out this building, but to support the intention, there must be some evidence of change in use. So in this case, management may demonstrate, since we are already running into a high cash crunch, and we have already discussed or we have already entered into a lease contract for shifting our head office from this place to another place. Okay. So this will evidence a change in use. In this case, the day
when the company has started leasing out this particular property, it will be reclassified from property, plant and equipment to investment property. So there must be a evidence of change in use also. Okay. So now we'll discuss one by one that how this accounting treatment will flow. So don't worry. If you have any doubt in this regard, don't worry. So after this flow chart, all the doubts will be cleared. So first of all, change in use, evidence of change in use. I would request everyone to please write down this evidence of change in use. So this is evidence of change in use. Okay. Then impact of transfer. What will be the impact of transfer? What will be the impact of transfer? And third one is what will be the deemed cost? What will be the deemed cost? Okay. So point number one, commencement of owner occupied property, commencement of PPE with a view to, so commencement of owner occupied property or of development with a view to owner occupation. Okay. So commencement of owner occupied property, means what does it mean? It means the company has started using its office. So earlier it was investment property. Now the company has started using it in business purposes. Okay, using its office. So it means this will be classified as transfer from investment property to PPE. So transfer from investment property to PPE. IndAS 40 to IndAS 16. So what will be the deemed cost here? What will the deemed cost here? So closing carrying value of investment property on the date of transfer. On the date of transfer will become the cost of PPE, will become the cost of PPE, cost of owner occupied property. So wherever I am saying PPE, so I am talking about owner occupied property. Any problem here? Any problem here? Earlier the company was using that building for rental purposes. Now the company has started its head office, corporate office, its production in that particular building. So it is commencement of owner occupied property. Company has started using that building as its office. So this is a transfer from investment property to PPE. So in this case, carrying value of investment property on the date of transfer will become the cost of the PPE, will become the opening cost. Any doubt here? Any doubt? Second point. From investment property, earlier it was investment property, now company has started development, company has started renovation or development for the purpose of sale, okay. If it is for the purpose of sale in the ordinary course of business, it will become inventory. So in this case, the impact of transfer will be investment property to inventory. IndAS 42, IndAS 2 inventory. So what is the cost? So what is the cost of this inventory? The carrying value of investment property, on the date of transfer will become cost of inventory. Okay, will become cost of inventory for IndAS 2. Is it clear? So simple. The closing cost of investment property will become the opening cost of PPE in the first case and opening cost of inventory in the second case. Okay. Point number three. Earlier it was used in the business purposes. Okay. Earlier it was PPE. Now the company has started
leasing out. The company has started giving on rent. So the company has shifted its head office, the company has shifted its factory, and the company wants to lease out to the tenant. Okay, so end of PP, starting of investment property. So here it will be, the impact of transfer will be PPE to investment property. Now what will be the cost? The carrying value of the PPE, the carrying value of the PPE on the date of transfer, will become the opening cost of IP, will become the opening cost of investment property, opening cost of IP. Okay, understood? Understood? Any doubt here? Let me know if you have any doubt here. Okay, so earlier the property was used as an inventory. The company wants to sell a property, the company wants to sell a building. Earlier it was used as a property. Point number 4. So earlier it was shown as an inventory, IndAS 2 inventory. But now the company wants to give that particular building on rental basis. Started giving on rent. So earlier the company wants to sell that building. Now the company wants to use that building to earn rentals. So in this case, this will be inventory to investment property. So again, in this case, the carrying value, the carrying value of the inventory, on the date of change, on the date of transfer, on the date of change, will become the cost of the investment property, Is it clear? Any doubt here? So first we are talking about investment property to PPE. Second, we are talking about investment property to inventory. Third, we are talking about PPE to investment property. Fourth, we are talking about inventory to investment property. Okay. So we are discussing transfer to and from investment property. So in case of transfer to and from investment property, there should be evidence of change in use. And on the date of change in use, the asset has to be reclassified, and it has to be taken at a opening value. It has to be taken, whatever the carrying value of the earlier asset was there. So this will become the deemed cost of the new asset. Okay. Any doubt here? Any problem? Any doubt? Guys, any doubt? Any problem? Please let me know. Sir, will there be any change if the company is giving a property on a rental basis to one party? So now the company has taken the premises from that tenant and has given it to another tenant. So it doesn't make any sense. Okay, there is no change. It will still continue as an investment property. Sir, whether it will make any change if the company is developing the investment property, the company has acquired an investment property. Now the company is renovating an investment property, and again the objective is to earn rental only. So it will continue to show as the investment property. So Purushottam, any doubt here? Purushottam, Kaustav, any doubt? Ambika, Pujita, Nanda, Gomati, any doubt? Okay, great. So friends, now we are moving on to a case study which is given in the Institute study material. Illustration number 4. Illustration number 4, page number 7.335. Moon Limited has purchased a building on 1st April 2001 at a cost of rupees 10 million. The building was used as a factory by the Moon Limited and was measured under cost model. The expected useful life of the building is estimated to be 10 years. So the cost of the building was 1 crore, which is 10 million on 1st April 2001. The building was used as a factory by the Moon Limited. It means it was a PPE, property, plant and equipment, and it was measured under a cost model of the PPE. Okay. The expected useful life of the building is estimated to be 10 years, and the life of the building is 10 years. It means, what is the depreciation every year? 10 million divided by 10, 1 million, 10 lakh depreciation every year. Due to decline in demand of the product, the company does not need the factory anymore and has rented out the building to a third party from 1st April 2005. So it means after 4 years, the company has stopped the production from that particular building, and the company has given that building on a lease basis. Okay. On this date, the fair value of the building is 8 million. Moon Limited uses cost model for accounting of its investment property. Okay. So Moon Limited is using a cost model. Now, what is the carrying value? What is the carrying value on the date of transfer? Thanks, Gomati, for confirming. So Gomati is saying concepts understood very clearly, sir. Thanks. So what is the carrying value? Guys, in this particular question, is there a evidence of change in use? Yes. Earlier, the building was used as a factory. Okay. Earlier, the building was used for a business purposes. It was PPE. After 4 years, this building have been used as a for earning rental purposes. So it will become a investment property. Now we need to calculate what is the carrying value of that building under IndAS 16 PPE on the date of transfer. So what is the carrying amount of the building after depreciation of 4 years? The cost is 10 million, and 4-year depreciation is 10 divided by 10 multiplied by 4 million. Okay. So the carrying value is 6 million. And the company has applied cost model, and hence there is no role of fair value here. There is no impairment as the fair value is greater than carrying amount of the building. Had this fair value, instead of 8 million, if in the question it was given that the fair value is 5 million, then what will happen? In that case, you have to recognize impairment loss of 1 million also. Okay. And the carrying value will become 5 million. So this, under this question, this 6 million will become a cost of the investment property. What will be the accounting entry? The accounting entry will be investment property account debit by 6 million to property, plant and equipment credit by 6 million. Okay. So the presentation of the asset will change. It will be shifted from property, plant and equipment to investment property. Okay. Is it okay, guys? Any doubt? Any doubt? Okay, perfect. So now we will be talking about the derecognition concept, last concept of the day, which is derecognition. So the derecognition concept, now tell me, so you already have understood IndAS 16. Now tell me when the property is going to be derecognized. Tell me when the property is going to be derecognized. When the property is going to be derecognized. When the property is going to be derecognized, tell me. So derecognition. The property is going to be derecognized when it is disposed of. When it is disposed of course, if the company will sell the investment property, it will be derecognized from the books of accounts. What could be the second situation? When future economic benefit has stopped arriving to the company. Okay. For example, the government has come up with a law, and government has told that the company cannot sell the land, or the company cannot sell the building, or the company cannot lease out the land or building. So if the future economic benefit is not expected at all, in that case, that investment property has to be derecognized from the books of accounts as an investment property. Okay. So first of all, it is disposed of. Second is its future economic benefit has not been expected to be received. Okay. And if there is any gain or loss, on derecognition, any gain or loss on derecognition, it will go to P&L. It will go to P&L. It will go to P&L as a other income or as a other expense. If the company is entitled to receive any compensation, for example, the government is providing a compensation for impairment or compensation for loss, that compensation has to be recognized in P&L only when that compensation will be received. When it is virtually certain that the compensation will be received. Okay, so this is all about this particular concept. Understood? So now quickly we'll do a case study from Institute study material, which is the last case study. Then we'll move on to some quickly objective type question, and then I'll take the query of Purushottam, which is related to IndAS 16. Okay. So in this example, if you will see this example from Institute study materials, Sun Limited, an aeronautics company, is having a building which is given on an operating lease. This means this building is an investment property. The book value of such building in the books is rupees 2 lakh. What is the book value? 2 lakh. So Pluto Limited offers to buy the building at rupees 4 lakh. So in this case, the Pluto Limited is buying this building at 4 lakh. So what will be the accounting entry in the books of Sun Limited? The accounting entry will be bank account debit 4 lakh to investment property 2 lakh. Investment property has to be credited at the carrying value, which is 2 lakh, and there is a gain on disposal of rupees 2 lakh, which is going to be recognized in P&L as a other income. Case B. Pluto Limited offers to take the building on finance lease for 10 years at a lease rental of rupees 80,000 per annum. The present value of minimum lease payment is 3,20,000. So Pluto Limited is offering that I am not going to buy this building, but please give me this building on a finance lease basis. So whenever the company will give the building on finance lease basis, Sun Limited has to derecognize this building from its books of accounts and create a receivable. So at what value the lease receivable will be debited? It will be debited at a present value of future lease payments. So in the question, the present value of minimum lease payment is given at 3,20,000. So accounting entry will be lease receivable at present value debit 3,20,000, investment property credited at carrying value 2 lakh, and the gain on disposal, which has to be recognized in P&L, is 1,20,000. Okay, so this is the illustration which is given under this Institute study material. So now I am moving on to my PPT quickly. Just a minute. So I'm not taking on this disclosure part. Okay. So quickly we'll do some concept testing, whether you are able to understood the concept or not. Quickly tell me, which of the following is not an example of investment property? Which of the following is not an example of investment property? Tell me quickly the answer of question number 1. Land held for undetermined future use. This is an example of investment property. Property leased to another entity under a finance lease. Property leased to another entity under an operating lease. So property leased to another entity under an operating lease, it is an example of investment property. Property being constructed for future use as an investment property, it is an example of investment property. So what is the right answer? Whether the PPT is visible? I hope the PPT is visible to you guys. Okay. Okay, sorry, I think there was some glitch from my side. Is it visible now? Is it visible now? Okay, so in this case, the right answer is property leased to another entity under a finance lease. Okay, because under a finance lease, the property is going to be derecognized. So it is not an example of investment property. So para 9 of IndAS 40 says that property leased as a finance lease is not an example of investment property under IndAS 40. Question number 2. An investment property should initially be measured at market value, fair value, net realizable value, cost. What is the right answer? So 3 students have replied. Chavi is saying fair value. Chavi, that is not correct. An investment property should initially be measured at cost. So D is the right answer. It has to be measured at cost. Okay. So I told you that the investment property shall be initially measured at cost. If an entity uses part of a building for their own use and rents the remainder, how should this be treated? So the entity is using partly for the business purposes, partly for the rental purposes. So how this should be treated? All as a significant, all as an investment property under IndAS 40, account for separately under IndAS 16 PPA and IndAS 40 IP. All under IndAS 16, none of these. What is the right answer? What is the right answer of question number 3? Yes, Ambika, this PPT should be shared and uploaded on Board of Studies portal. Don't worry about that. Yes, what is the right answer? 4, 5 students have replied. Yes, you all are right. So the answer is B. Para 10 says that if the owner uses part of the property for its own use and part to earn rentals or for capital appreciation, and the portion can be sold or leased out separately, in that case they are accounted for separately. Okay. Question number 4. Sorry. Entity using the cost model for investment property must also disclose the fair value of investment property. What is your answer as far as question number 4 is concerned? I have told you in measurement after recognition, I have told you that this fair value concept is not applicable for accounting, but yes, the disclosure of fair value is mandatory in the notes to accounts. So in this case, even though the entity is using the cost model, okay, which is the only model given under IndAS 40, but the entity is required to disclose the fair value of the investment property in the notes to accounts. Okay. Para 79 says that an entity should disclose the fair value of investment property. Question number 5. Investment property after recognition should be measured at cost or fair value model, cost model, or net realizable value. What is the right answer of question number 5? Yes, the right answer is cost model. Para 30 says that an entity shall adopt as its accounting policy the cost model for measurement after recognition. This is the only model which is allowed. Under IFRS, there are 2 models, cost model or fair value model. So this is all about this IndAS 40 standard. Okay, IndAS 40 investment property standard. So friends, now let me know if you have any query related to IndAS 16 or IndAS 40. Purushottam, you can raise your query now. I hope you have understood. IndAS 40 investment property. We discussed what is investment property. We discussed what is the meaning of investment property, what is the meaning of owner occupied property or property, plant and equipment. We discussed the important aspect that if there is a dual purpose, then how the treatment will happen. If the company is able to sold separately, treatment would be different. If the company is not able to sold separately, the treatment would be different. You need to see what is the significant portion, what is the significant part. Okay. Then you need to see recognition criteria. So recognition criteria is future economic benefit and cost can be measured reliably. Okay. And then it has to be same for the initial recognition and subsequent recognition. Then you need to see that initially it has to be measured at cost. Cost includes purchase price plus non-refundable taxes plus directly attributable cost. Okay. Then we discussed that the concept of deferred payment credit, concept of exchange of asset. So we have discussed all this stuff. Measurement after recognition, we discussed that we need to take it to cost model. Okay. And the fair value is required to be disclosed. Then we discussed, after this, we discussed that the derecognition concept. Okay. So we discussed all this part in detail and we have covered all the case studies which is there in the study material. The rest is your homework. You have to do the homework and you have to solve all the case studies. So let me look at the so question number 6 of PP relating to decommissioning liability. So Kaustav is also talking about question number 6 relating to decommissioning liability. So thank you Gomati and Ambika for for the appreciation. So Deepa is asking, how do we disclose fixed asset and investment asset in balance sheet? So Deepika, a fixed asset has to be shown as a separate line item in the balance sheet as a property, plant and equipment, and this investment property has to be shown as a separate line item in the balance sheet as a investment property. Okay. So Kaustav and Chavi, this will be a time consuming exercise. You can connect with me offline for this particular query. Okay. And let me take the query of Purushottam. Purushottam is asking, sir, if a company construct a temporary building at customer site for customer to construct power plant over a period of 3 years, is that need to be capitalized or charges to P&L? I show one company financial, they charge to P&L. That's why I'm asking. Purushottam, technically speaking, that temporary site has to provide a future economic benefit over a period of 3 years. Okay. So technically it should be capitalized. Probably the annual report or a company which you have seen, they probably must have taken it to P&L account looking into the materiality. Okay. So probably for that company, that construction site, that temporary building at construction site could be of an immaterial value. Okay. But otherwise it should be capitalized if it has to be used for a period of if it has to be used for a period of 3 years. Okay. So technically speaking, it is expected to be used for more than 1 year. So it has to be capitalized because it is meeting the all 3 definitions of PP: tangible item, held for use in production or supply of goods and services, and expected to be used for more than 1 year. So friends, thank you so much. And let me quickly see if any query is there relating to investment property. So Purushottam, I have answered your query relating to IndAS 16 also. And sorry, Chavi and Kaustav, I will not be able to take illustration number 6 because it is already 10:03 now. So you can connect with me offline for any query relating to this particular illustration. Thank you so much. Stay happy, stay safe, students. Thank you.